are slow. Good morning. I call this hearing to order. I want to make sure to note some important requirements. Let me begin by saying that standing House and committee rules and practice will continue to apply during hybrid proceedings. All members are reminded that they are expected to adhere to these standing rules. House regulations require members to be visible through a video connection throughout the proceeding, so please keep your cameras on. Also, please remember to remain muted until you are recognized to minimize background noise. If you have to participate in another proceeding, please exit this one and log back in later. In the event a member encounters technical issues that prevent them from being recognized for their questioning, I will move to the next available member of the same party. I will recognize that member at the next appropriate time slot, provided they have returned to the proceeding. For those members physically present in the committee room today, we will also be following the health and safety guidelines issued by the attending physician. That includes social distancing and especially the use of masks. Members and staff are expected to wear masks at all times while in the hearing room, and I thank you in advance for your commitment to a safe environment for all here today. 1 year ago today, during the early stages of the pandemic, this committee held our first hearing on the impact of COVID on small businesses. Since that hearing, our committee has been working relentlessly to get them the aid they need to make it through this crisis. One of Congress' earliest and most effective means of distributing relief to small businesses was through the Paycheck Protection Program. Congress created PPP through the CARES Act to provide fully guaranteed, forgivable loans to meet payroll costs and other business expenses. Today, PPP is still providing urgently needed funding. The program accepts applications for first and second draw loans and has approved 2.1 million loans totaling $156.2 billion during 2021. The high level of demand for PPP loans is a testament to the program's effectiveness and the lingering impact of the pandemic. It is clear that small businesses still need help, but lingering issues in the program have led to the need for Congress to consider a short-term extension beyond March 31st. Across the country, case counts, hospitalizations, and deaths are trending in the right direction. At the same time, we are vaccinating millions of Americans daily. This is cause for optimism, but it does not mean this crisis is over. The pandemic has caused unprecedented harm for small businesses, and it will be a mistake to withdraw support abruptly. Congress must work to understand the current realities facing small business owners and extend PPP to meet their needs. We also continue to address the persistent issue of inequity within the program. In the beginning, larger businesses with ties to big banks received loans at the expense of the smaller businesses. We have instituted numerous reforms to empower community lenders to spread relief to underserved businesses. The Biden administration also took decisive action to get funding to small businesses that have previously been neglected. On February 22nd, President Biden announced the implementation of a 14-day exclusivity window for small businesses with fewer than 20 employees. The president also acted to get more money to sole proprietors. made formerly incarcerated individuals and those with federal student loan delinquencies eligible for PPP, and clarifies the use of ITNs. I am pleased to report that these changes have been effective in getting money to smaller businesses. According to the Biden administration, there has been a 20% increase in loans approved to minority-owned businesses, a 14% increase in loans approved to women-owned businesses, and a 12% increase in loans approved to businesses in rural areas. During the exclusivity period, SBA has served more than 400,000 small businesses with fewer than 20 employees, nearly 200,000 of which are first-time PPP borrowers. This is meaningful progress and a sign of the impact that deliberate reforms can have on businesses that are often neglected. Today's hearing is timely. I hope that it will give us the opportunity to examine the impact the Biden administration reforms have made on small business owners and lenders and help us identify ongoing challenges we continue to hear about from borrowers and lenders alike. I look forward to hearing from our panelists about the current state of PPP and their recommendations on the program's future. And now I would like to yield to the ranking member, Mr. Lukemeyer, for his opening statement.
Thank you, Madam Chair, and thank you for calling this hearing on this very important topic. The title of this hearing is The Next Steps for the Paycheck Protection Program. This is a particularly important topic given the fact that the PPP is set to expire on March 31st, just 3 weeks from today. I'm interested to hear from the panel before us on how lenders and businesses view the program, areas it should be improved, and how to adjust the program moving forward. While discussion on the next steps is critical, I want to reiterate how successful this program has been to date. With the state and local shutdown sweeping the nation to protect against the spread of COVID-19, the Small Business Administration and the Department of the Treasury implemented the PPP in a matter of days. From the day it opened in early April to the day it concluded on August 8th, 2020, the first round of PPP provided just over 5.2 million loans, totaling $525 billion, with loans averaging approximately $100,000. According to the SBA, more than 50 million small business jobs were either saved or assisted by the PPP through the program's first round in 2020. The latest round of PPP includes a second draw loan for businesses still struggling with the pandemic and has provided approximately 2.4 million new loans for $164 billion. The average loan for the second round is just under $70,000. Despite the success of the PPP, this program was always meant to be temporary. As a reminder, the PPP was created under the CARES Act, which was signed into law by former President Trump on March 27, 2020. The program's current end date, on March 31st, 2021, marks almost exactly 1 year today from when it opened. Across America, we are seeing vaccines in arms and lockdowns being lifted. These actions are allowing businesses the ability to start turning the corner and recover. The latest statistics from the SBA on the PPP reiterate these facts as the demand for PPP loans has slowed. Additionally, the SBA has informed lenders that on March 31st deadline, the SBA will stop processing loans, which is very concerning. This means that even if a small business files the application and a lender submits it to SBA before the deadline, the SBA will stop any and all processing of the loan on March 31st. I've spoken to many lenders on this issue, and instead of taking applications that will never be processed by the SBA, they're planning to shut down their PPP lending until entirely before the March 31st deadline. While the PPP has been a bipartisan product throughout its tenure, from the CARES Act, PPP Flexibility Act, and December COVID package, my colleagues on the other side of the aisle decided to make the latest COVID relief package a strictly partisan process. In their partisanship, they passed legislation that did not extend the PPP deadline, despite adding over $7 billion in funding to the PPP and increasing the applicant pool of the program. The end result of this is the passage of a bill seeking to beef up a program that is already winding down and will end shortly. Given these realities, I look forward to hearing from the panel today, regarding what changes we need to make within the program and what steps Congress needs to take. Congress has important decisions to make, and it is my hope that this hearing will assist us as we tackle the topics of small business relief and small business recovery. With that, Madam Chair, I yield back the time, and I also thank the witnesses for being with us this morning.
Thank you, Mr. Lukemeyer. I would like to take a moment to explain how this hearing will proceed. Each witness will have 5 minutes to provide a statement, and each committee member will have 5 minutes for questions. Please ensure that your microphone is on when you begin speaking and that you return to mute when finished. With that, I would like to introduce our witnesses. Our first witness today is Ms. Hilda Kennedy, founder and president of AMPAC, Tri-State CDC in Ontario, California. AMPAC CDC is a nonprofit certified lender of the U.S. Small Business Administration, working to finance the growth of small businesses. AMPAC has provided funding to over 135 with greater than $200 million in loans under Ms. Kennedy's direction. Our second witness is Ms. Lisa Bobin. Ms. Bobin is the president and CEO of Unico Communications, Inc. in San Antonio, Texas. Unico Communications is a Latina-owned microbusiness operating in the event space. With assistance from the PPP and IRAP programs, she has been able to adapt her business to the changing reality of her industry and avoid layoffs. Our third witness is Ms. Lisa Simpson, Vice President of Firm Services at the American Institute of CPAs. Ms. Simpson leads the private companies practice section team at AICPA and works on the development of practice management tools that address topics most important to accounting firm owners. And I would now like to yield to Ranking Member Mr. Lukemeyer to introduce our final witness.
Thank you, Madam. Thank you, Madam Chair. Next witness is Ms. Alice Frazier. Ms. Frazier is the President and Chief Executive Officer of the Bank of Charlestown in Charlestown, West Virginia. She also holds several positions at the Independent Community Bankers of America, which is also known as ICBA, and today she is testifying on its behalf. At ICBA, she is currently the organization's secretary on the board of directors and chair of the Policy Development Committee. With the Bank of Charlestown participating in both the first and second rounds of PPP, along with her numerous roles at ICBA, I look forward to hearing from Ms. Frazier's perspective on the program as well as what Congress should be concentrating on over the next few weeks. Ms. Frazier, I'd like to thank you and other witnesses for joining us today, and I anticipate a thoughtful and informative discussion. Thank you very much.
Thank you, Mr. Lukemeyer, and I welcome all the witnesses and thank you for taking time to be with us today. The first witness, Ms. Kennedy, you are now recognized for 5 minutes.
Thank you, Chairwoman Velasquez, Ranking Member Lukemeyer, my Congresswoman Judy Chu, and distinguished members of the committee. Good morning, and thank you for having me today. My name is Hilda Kennedy, and I'm the founder and president of AMPAC Tri-State CDC. We're based in Ontario, California. I'm thrilled to have the opportunity to tell you about AMPAC and our participation in the Paycheck Protection Program, our commitment to providing access to capital to underserved borrowers, and policies that could help the committee in determining next steps. AMPAC was established and approved as the first faith-based CDC committed to helping businesses in economically disadvantaged communities and committed to walking hand in hand with businesses throughout the lending process. I founded AMPAC in 2005, became a CDC in 2007, and a microlender in CDFI just 4 years ago. Today, we've helped small businesses obtain more than $500 million in SBA 504 loans and serve startup, emerging, and scaling small businesses with SBA microloans and CDFI loans, and partnered with several local governments to help small businesses. In the last year, we also served the Paycheck Protection Program, but getting started was not without its challenges. At first, we had to be approved as SBA lenders for PPP. Then when Congress identified community financial institutions or CFIs to provide needed PPP funding, lending, CDCs, CDFIs, and microloans, AMPAC stepped in with a firm commitment to help the smallest of businesses with loans under $50,000. I want to publicly thank my Congresswoman, Judy Chu, for helping us to get attention on the issue of establishing guidelines for CFIs to start lending. As nonprofit lenders, CDCs also face liquidity issues. The availability for CFIs to lend through the Federal Reserve Liquidity Facility, which the Fed just extended, thank you, has been a lifeline for participating CDCs to continue to deliver PPP loans. Being designated as lenders for PPP and addressing the liquidity issues were two of the major barriers to non-bank lenders participating in PPP. Once we got underway, AMPAC funded 171 loans totaling over $3 million with an average loan size of $17,000. And to put a face on these numbers, I'm reminded of Leticia. She got a loan for a party planning business for $2,875. And you would have guessed she got $1 million PPP loan. She came to us saying, "You have no idea what this means to my family." When we reached out to Leticia regarding the Schedule C changes for her second draw, Leticia qualified for a $20,000 PPP loan. In my written testimony, I shared a story about Calvin, a custodial maintenance company who had been rejected and waitlisted by every emergency relief program. But when the Schedule C qualifying calculation changed, Calvin qualified for a $13,000 loan. He said, "Hilda, I can't believe somebody finally said yes." He's now able to pay his employees and keep his business afloat. We have many Calvins and Leticias in our community, and I know several of my colleagues do as well. So many of the Schedule C filers miss the opportunity for a higher PPP loan in the first round and are in danger of missing out on this round of funding since it took until March 3rd to get the new forms. Time is not on our side. These businesses need a little more help and they're willing to do the work. Calvin and Leticia are among the 95% Black and 91% Latino Schedule C filers who need this relief, and we need time to serve them. As PPP comes to a conclusion, long-term recovery is top of mind, and we believe Community Advantage is a critical tool, especially for targeting businesses in underserved communities and to help PPP stabilize businesses' growth. SBA needs to move forward to approve qualified lenders ready to serve. As I conclude my comments, I want to thank the committee for the impactful aid to SBA small business borrowers via debt relief payments. Unfortunately, as you know, there is a shortfall in this aid. I cannot overstate the fact that these payments are critical for these small business borrowers. AMPAC and my CDC colleagues across the country and in your communities are here and available to serve small businesses, to help them recover and to support their growth. I sincerely appreciate the opportunity to testify this morning and share AMPAC's experience with the PPP program and our mission to serve underserved borrowers. I look forward to answering any questions you have. Thank you.
Thank you, Ms. Kennedy. Ms. Bombin, you are now recognized for 5 minutes.
Thank you, Chairwoman Velasquez and members of this committee, for affording me a moment of your time to share my story as a Latina small business owner. I'm the founder and owner of Unico Communications, a 16-year event production company, and a Latina-owned business headquartered in San Antonio, Texas. I'm proud to say the company has a solid reputation of producing large-scale events for the nation's most reputable nonprofit organizations. And I'm honored to represent a larger event industry that includes master storytellers, writers, planners, producers, audio and video engineers, caterers, and so many more magicians that work tirelessly behind the scenes of our most memorable celebrations, concerts, conferences, and events. The pandemic left my business, along with thousands of other event companies across the country, scrambling to develop a method to sustain my staff and execute payroll in the midst of so much uncertainty. The merciless effects of the resulting shutdown were evident in the swift volume of event cancellations that followed. our business came to an abrupt halt. The only alternative was to suspend my own salary to retain as much cash flow, enabling us to keep our staff secure and fully employed for the immediate future. After several emotional, exhaustive days of seeking a new business strategy and plan, we had a glimmer of hope when Congress established the Paycheck Protection Program and the CARES Act. To say the initial rollout was problematic may be an understatement. When the application window opened, I, like so many other small businesses, had been banking with a well-known national bank. And along with many small minority-owned businesses, we were left in the dark. Our financial institution provided no method of submitting an application, instead offering only a landing page to stay tuned for more details. And I found myself seeing the hours slip away and feeling the anxiety rise in what felt like a random selection of some of my peers and fellow business owners who had confirmed their applications had been successfully processed at other banks. All while payroll deadlines loomed for my team. After multiple attempts to submit our application, I contacted the U.S. Hispanic Chamber of Commerce to seek advice and technical assistance, and they recommended that I submit a PPP application through a small community bank, as they had been seeing an increased track record of successful submissions from other members across the country. Furthermore, the USHCC was one of the few national organizations providing technical assistance in both English and Spanish to minority-owned businesses, and worked with the SBA to have them translate their resources into multiple languages. There wasn't a list of lenders from which to start. I brought in my husband to help research, and we began making calls and scouring the internet through the night to research local banks across our state to see if they would accept applications from new customers. We were incredibly fortunate to have had success in submitting and securing a PPP loan in the amount of $26,900 through Pioneer Bank, a small Texas regional institution. Sadly, not all businesses like mine were able to secure a PPP loan. There were more than 150,000 Latino small business owners that lacked the access to technology and guidance to resources in Spanish, and as a result, have succumbed to closure. According to a study published by Small Business Majority, which surveyed small and minority-owned business owners, 1 in 3 say the process of applying for the PPP was challenging due to the calculations and paperwork involved. And nearly 1 in 4 said that finding a lender willing to accept their application was challenging. Now, more than ever, small minority-owned businesses need the U.S. Small Business Administration and its portfolio of loans and technical assistance programs. Our business membership with the U.S. Hispanic Chamber of Commerce helped me navigate this convoluted process through their communications. Furthermore, I received technical guidance from the University of Texas at San Antonio's Small Business Development Center and additional funding through the City of San Antonio's Recovery Grant Program facilitated by Lift Fund, a community development financial institution. These 3 entities were critical in my business success during one of the most unprecedented economic times in American history. If it had not been for the forgivable loans built into the CARES Act, our business would not have been able to survive because we could not sustain more debt. As a small business owner, I call upon our members of Congress to expand PPP loans for our nation's small and minority-owned businesses, and to provide more support and financial resources to the SBA and the Minority Business Development Agency to fund critical technical assistance in multiple languages through public-private partnerships with chambers of commerce and other business associations across the country. Our road to recovery is still vast, and organizations like these need to be funded and sustained to continue helping businesses like mine navigate the ongoing economic crisis. Thank you again, Chairwoman Velasquez and members of this committee, for your leadership and continued legislative collaboration to ensure the economic survival of America's more than 30 million small businesses, of which 4.7 million are Hispanic-owned.
Thank you, Ms. Bombin. And now we recognize Ms. Simpson for 5 minutes. Ms. Simpson, you're muted. You need to unmute yourself.
Common for me, I apologize.
Okay.
Thank you again for the opportunity to talk about the Paycheck Protection Program on behalf of the American Institute for CPAs. I'm Lisa Simpson. I'm the Vice President of Firm Services. And in my role, I've been helping support thousands of small CPA firms and their business clients navigate PPP since the program launched last April. I want to thank Congress, the SBA, and Treasury for the program and the lifeline that it's provided at a critical time. It helped so many businesses and nonprofits keep their employees on the payroll, keep the lights on, pay the rent, and position their businesses to succeed when the economy is ready to reopen. In my testimony, I want to talk about how the accounting profession is helping PPP borrowers, review some of the major challenges within the system currently, and ask Congress to extend the PPP application period for at least an additional 60 days. Many small business owners do not have accounting professionals in-house, so when PPP opened, they immediately turned to their CPAs as their trusted business advisor to help with the program. So to help the CPAs and their small business clients, we developed free resources, including loan amount calculators, loan forgiveness calculators, and we provided town halls to allow for questions and answers to be submitted to provide the latest breaking news on guidance and changes so that we could make these free resources available to the small business owner who maybe doesn't love accounting as much as I do. So we tried to approach it from their perspective. We also asked to engage with the SBA, Treasury, payroll providers, and lenders to create a holistic environment where we could talk about the challenges and areas where additional guidance might be needed. There are current operational challenges, as you've heard about. When PPP reopened in 2021, the SBA implemented front-end compliance checks designed to limit and reduce the amount of fraud in the program. We support those reasonable steps to limit fraud and to protect taxpayer money. However, these challenges, these front-end compliance checks have created significant challenges for small business borrowers to be able to access the SBA system and to get their loans through the system and into the approval process. As we discussed in written testimony, there are over 50 error codes and flags that can be difficult to decipher and resolve by both the lender and the borrower. Borrowers can end up being caught in limbo for weeks. We've heard of situations where borrowers are caught for as long as 6 weeks waiting for their application to either get into the system or make it through to the approval process. One of those borrowers is Shawnetta, who I spoke with several times. Her application was caught. 2020 was a very difficult year for her. She survived COVID and cancer, but her loan application in 2021 was stuck. She ended up having to give up her warehouse space before her loan ultimately came through. These flags and error codes impact the smallest businesses and can trigger a loop where there's no way to get out. So we're asking for transparency and additional resources to resolve these error codes. Recent changes to the program for self-employed borrowers are well intended to provide additional relief to the smallest self-employed borrowers. However, changing a program midstream has caused anxiety, confusion, and delays in the process. The guidance was released in March 3rd. Lenders are still working to update their systems to enhance, to accept these changes. And now we're hearing that many lenders are simply closing their application windows because they need time to clear out the applications that are in process. For these reasons, we're asking for that at least a 60-day extension on the application window. The changes for self-employed borrowers are not retroactive, and this is resulting in a situation where hundreds of thousands, perhaps as many as 2 million self-employed borrowers are not able to take advantage of this enhanced loan amount. So they're feeling like they've been left behind and are not able to get loans that our CPAs who support small and minority-owned businesses are saying $7,000 to $10,000 in additional loan amounts could make the difference in the survival of these small businesses as we turn the corner. In addition to the complexities within the system, CPAs who are instrumental in helping their small business clients and not-for-profits navigate PPP are also dealing with counseling around issues like the employee retention credit, EIDL, the shuttered venue operator grant, which we're still looking for guidance on. So providing additional time will allow the CPA to work with small business borrowers to find the program that best suits their needs. In conclusion, I'd like to thank Congress and the SBA and Treasury for engaging in a conversation around how to improve this program, how to keep it going, and I'd urgently urge you to extend the deadline for at least another 60 days. Thank you.
Thank you, Ms. Simpson. And now we recognize Ms. Frazier for 5 minutes.
Thank you, Chairwoman Velasquez, Ranking Member Budemeyer, and members of this committee. I am Alice Frazier, President and CEO of Bank of Charlestown, a $620 million asset community bank in the Eastern Panhandle of West Virginia, and we serve Hagerstown, Maryland, and Loudoun County, Virginia as well. Today, I am testifying on behalf of the Independent Community Bankers of America, where I serve as chair of the Policy Development Committee and a member of the Board of Directors. Thank you for this opportunity to testify at today's hearing. The PPP has been a lifeline for small businesses, churches, and other nonprofits in the communities we serve. My comments reflect conversations with hundreds of community bankers across the country. The program was a natural fit in the business model of a community bank, as we are the small business lending specialist with deep roots in the communities we serve. My bank's PPP lending is typical of any community bank across this nation. In the first round, we made 557 loans. In the second round, we have seen approximately half the demand and have made 272 loans to date. In each round, about 85% of the loans were under $150,000, and more than half were microloans of less than $50,000. Our PPP lending has saved nearly 7,000 jobs so far and is really making a difference in the communities we serve. Other community banks have had similar results. In fact, community banks made 60% of the first round PPP loans, which supported over 33.7 million jobs. What's more, community banks made over 70% of the PPP loans to minority-owned and women-owned businesses, and over 60% of the PPP loans to veteran-owned businesses. To obtain most of the value of this program for the communities we serve, ECT Bank of Charlestown, like all community banks, is committed to conducting outreach to potential applicants. During the first round, we recorded podcasts and participated in local radio shows. In the second round, after learning that some minority communities lacked access to the program, we initiated targeted outreach to reach these communities. In recent webinars we sponsored with the local chapters of the NAACP, we encountered numerous businesses, churches, and other loan candidates that had not previously applied for a PPP loan because they felt they couldn't find help with the paperwork, or because they were turned away by a larger bank as too small. To date, we've helped 38 businesses obtain first draw loans during this second round. Just last week, we had an African American church applicant for a first draw loan. Though they qualified for a $4,000 loan, they only requested $2,000 because they were concerned that if it were not fully forgiven, they did not want to be left with an outstanding loan. After additional education and coaching, they decided to take the full amount. This program cannot fulfill its potential without the one-on-one advice from a lender who is committed to making it work. And as you know, the PPP closes 3 weeks from today on March 31st. And while demand for the program has slowed significantly, there are still businesses and nonprofits that desperately need these funds. At this moment, thousands of applications are in limbo because they were put on hold by an automated screening program. With deadline approaching, we ask this committee's help in urging the SBA to expedite the review of these holds. Also, under current law, any application not approved by March 31st, even if it was submitted prior to that date, cannot receive PPP funds. No applicant should be left stranded because of bureaucratic red tape. we believe an application submitted by March 31st should be eligible for approval and funding. Lastly, if the Congress extends the deadline beyond March 31st or creates another round of PPP, the program should be targeted at those industries that have suffered the most in the pandemic: hospitality, travel, conventions, and others. These industries are major employers in many of the regions of the country and will continue to need assistance until the economy is fully reopened. We have a set of recommendations for ensuring the funds are equitably distributed and obtain the most value for job preservation, and I refer you to my written testimony for more detail. Thank you again for convening today's meeting, your leadership, and the opportunity to offer my perspective. I am happy to answer any questions you may have.
Thank you, Ms. Fraser, and thank to all the witnesses for the incredible, important information that you have shared with us. I would like to address my first question to Ms. Kennedy. I was pleased to see the Biden administration announce policy changes, allowing sole proprietors to secure considerably larger PPP loans. Given that 70% of businesses without employees are owned by women and people of color, can you discuss the impact the rule will have on them and their ability to recover from the pandemic?
Thank you, Chairwoman Velasquez. And I can't overstate the significant impact to women and minorities for this program. The examples that I gave to you in African American owned custodial maintenance company and Leticia, a Latina owned, woman owned business in the party planning space, they absolutely need those resources. And that Schedule C change was absolutely critical. Our involvement with the Women Business Owners Association in our local area and statewide, our involvement with local Black and Latino chambers of commerce, they need and want this program for Schedule C borrowers. And that change will be the difference between them keeping their doors open or closing.
Thank you. Thank you. Ms. Jensen, as a representative of the CPA community, you deal with your small business clients regularly, and I am sure they bank at different places. We have heard feedback that some larger lenders are not currently processing PPP loan forgiveness applications for loans made in 2020. What consequences could a serious delay in PPP loan forgiveness have on small business?
Thank you, Chairwoman Velasquez. PPP forgiveness is complicated depending on the amount of the loan, and there's been conversation leading up to the legislation that was passed December 27th around whether or not the forgiveness process could be simplified for loans of $150,000 and less, which was approved. We do expect that there will be an increase in the capacity of lenders to begin accepting those forgiveness applications again. They've put all their efforts recently into launching this new round of PPP, but we know that they are certainly, from the conversations we've had, they seem willing and anxious to turn to forgiveness processing. We believe that this gives borrowers ample time to navigate other relief options, such as the employee retention credit, which can be an amazing source of much-needed funds, but there are complicated interplays between employee retention credit and PPP, so taking the time to navigate that is vital.
Thank you. Ms. Bombin, I understand your initial PPP loan application was denied, and you have to find a lender who will be willing to make a PPP loan to a 4-employee microbusiness such as yours. Can you elaborate on that process now that you have received your PPP loan? And how did your PPP experience change your views on banking big versus banking small?
Thank you so much for this time, Chairwoman. I would want to elaborate that it wasn't that it was denied, it was not available. We received notice from this national bank, and on their landing page, they simply redirected as the grand opening of the PPP had been window had been opened on April 3rd. They had a statement on the website basically letting folks know that because there was significant interest, they were not able yet to process, and there's been a high volume of interest received, but they were not yet accepting. So within that period of time, as we scoured and found Pioneer Bank, it became our lifeline for our business. We see this experience now as eye-opening. I feel the value of ensuring that we put our business, small businesses, dollars and our worth to financial institutions that respect our investment, our time, and the power that we bring as one body is critical. So after applying through this smaller bank, it became clear that the only way we could see change happen is by moving your funds and your worth and your revenue to facilities and banks that do value you. As of this time, we received funding. We have now moved our business accounts over to a smaller local bank. It's a very different experience, but every time I call, they know my name. It is refreshing.
Thank you. Thank you. My time has expired, and now I recognize the ranking member, Mr. Lukemeyer.
Thank you, Madam Chair. Ms. Frazier, as we all know, the March 31st deadline is quickly approaching. In your testimony, you state that community banks have seen a demand, or at least your bank has seen a demand cut in half for the second round of PPP here compared to the first round. Can you provide a little more detail on what you think is the reason for that? Is it just not enough banks or people qualifying, or do you think there's no demand for it, or in your particular area, your economy is coming back, or what can you elaborate on it just a little bit further? Ms. Frazier, unmute, please.
Thank you very much. I would say necessarily there would be less folks applying for the loan just with the new rules of having to demonstrate 25% impact to gross revenues over a quarter. There are businesses that have recovered, but there are many small businesses that still desperately need this program. And as I mentioned in my testimony, there are still small businesses that didn't apply the first time that are gaining their first draw this time. And so I would liken it that the program with 500 and less employees has diminished the numbers that qualify, and the program is far more targeted and focused on those that need it the most.
Well, in your testimony, you suggest that if we do another round, that it be more targeted. And I'm kind of curious, what's the reason that the applicants in your business did not apply for the first round? Were they not in business? They were struggling to do that, or they thought they could do without it? They just want to go through the hassle, or the bank didn't contact them, or what was the reason for not even being wanting to participate the first time?
So I'll give you, if I may, a few examples to that. First of all, just a week ago, I was speaking with a restaurant owner who had tried to apply in the first round with their bank, similar to Ms. Bombin. The bank itself was not helpful in getting that to her, and she was busy working in the business rather than having time to work on the business and make these applications. So she now has applied with us for a first round draw. Given the timeframes of March 31st deadline, she will not be able to access a second draw, which her restaurant will clearly need to continue to survive. But I also would state that I don't know that it's about not having access. I think it's about having information. And outreach is critically important, as I cited in the testimony, and us like all community banks have done, is really reached into the community
Right.
to meet.
Well, it's disappointing to hear that the banks are not doing their job, which is to try and help their customers access the program, because I think that's part of their job, is to be able to help the customer access this program, be able to help them through the problem and help their community. It's disappointing to hear that they're not doing that. One more question for you before I move on to another witness here. With regards to the code problem, there's about 50,000 loans right now sitting in at SBA that they're working through manually trying to get these things done. And by end of the month, anticipate somewhere around 10,000 of them still not being able to be processed because of that code problem. What is your solution to that, or have you been talking to the SBA? What did they say? Where do you think we stand on that?
That is definitely a difficult issue. We have, for example, one borrower that has been in a code issue since January 29th that we've been trying to resolve. And you are forced to use the systems to do that. However, not always can you resolve an issue through a system, and you need to speak with somebody that has expertise and ability to point you in the right direction so that the borrower can benefit from this program. And so if we could have a true experienced help desk with a live person that can answer the phone and be able to support us, I think we would be able to find error resolutions moving along much faster.
Appreciate
Thank
that.
you.
Ms. Simpson, you mentioned in your testimony that you think there's as many as 2 million loans that are sitting out there waiting to get money that probably will not apply. Where do you get that figure from, and what do you think is the holdup on that?
Let me clarify that comment. The 2 million represents the number of self-employed business owners who, based on the data that we have available, may have already applied for either for a first draw loan at the reduced loan amount. So they can't take advantage of the increase based on the new guidance.
Okay. All right. Thank you very much. My time's expired. Madam Chair, I yield back.
Gentleman's time has expired. Now we recognize the chairman, the subcommittee on underserved agriculture and rural business, Mr. Golden from Maine.
Thank you, Madam Chair. I think I'm going to try and follow up a little bit further with that final question from the ranking member, and I'll direct it at Ms. Simpson. So we already know that you've mentioned this issue in your testimony, where you found that a lot of your members probably could have gotten a much higher PPP maximum, maybe around 50% higher if they were able to retroactively adjust the max amount to account for SBA's recent guidance for 1040 Schedule C filers. Do you or your association have any kind of estimates about what share of Schedule C filers could benefit from a retroactive application?
I don't. I'm sorry. We can certainly take that back to the team and try to find that information. There is a cap on the loan amounts for Schedule C borrowers, just like all owners of 20,883. So that does limit the cap of the loan. But we can certainly take that back and look into it.
Yeah, that would be very helpful. And if anyone else on the panel thinks they have any idea of what the scale is like out there, that could obviously have an impact on future discussions about additional appropriations for the program if people were allowed to apply retroactively for a higher loan amount. So I think that would be very helpful information for this committee and for Congress. I guess I would also ask Ms. Simpson, if you've heard any examples from clients that your association represents who are in a situation with the Shuttered Venue Operators Grant Program, where we have a venue that is publicly owned but privately operated, who are questioning whether or not they're going to be eligible for that program?
There is certainly certain uncertainty around the requirements for what we affectionately call the SBOG, and so they are anxiously waiting for that program to open up and for the process to begin to apply.
So you don't have any early information about what eligibility is going to look like for those types of entities then?
That's correct. I do not.
All right, that's helpful. I think basically everyone on the panel, or at least pretty close to, has talked about some of the issues with 2021 applicants facing delays related to error flags in the SBA system. And some of you have suggested that perhaps we should ensure that people are eligible beyond March 31 if they miss that deadline through no fault of their own. Essentially, if the flag is dropped and is resolved in their favor, but then they find that they're not eligible. So I think everyone is in agreement about that. But I'm also hearing from a lot of constituents who are looking at the shuttered venue operators grant, but they're worried that they're going to find out late in the game that they're not eligible. And then it will be too late to apply for a second draw PPP or even a first draw PPP. So would any of you recommend maybe some kind of like safe harbor to address a situation like that, where people are waiting for the shuttered venue program, but could be excluded, late in the game, and then miss the ability to apply for PPP?
I believe that there is a current proposal to allow PPP almost as a bridge while waiting for the requirements around the SVOG to be fully fleshed out, and then that PPP loan could be reduced from the amount of any SVOG grant.
And
the challenge there,
do you know that was just a proposal, correct?
That's correct. It's just a proposal as far as I understand. But the challenge there is the impending March 31 deadline on loan applications. And I think SVOG eligible entities are just nervous about which way to go.
Thank you. If anyone else wants any other feedback, you got about 30 seconds left of my time. I'd be happy to let you have it.
I would just like to add that I would consider that also in the targeted industries, that if you were to extend the deadline, that this too would be one of those industries that should be eligible for that.
The gentleman,
Madam Chair, I yield back.
the gentleman yields back, and now we recognize the gentleman from Texas, Mr. Williams, Vice Ranking Member of the committee, for 5 minutes.
Thank you, Madam Chairwoman. PPP was designed to help small businesses during COVID-19 and keep employees on payroll. The program was only designed to be 8 weeks long to sustain businesses during short-term lockdowns. My colleagues on the other side are focused on expanding the program for political gains with union members and Planned Parenthood, over prioritizing hardworking businesses that use this program as a lifeline. It is irresponsible for Congress to continue expanding PPP unless it targets specific industries that have been hit hardest by the COVID restrictions. We don't want PPP to become part of an economy. At the end of the day, we need to cut taxes. So my question to you, Ms. Frazier, what metrics should we be looking at as we disperse what is left in PPP, and how do we determine what industries should be targeted?
Thank you. I believe the metrics that you began with in this, what's called second round, where you looked at the number of employees and an actual impact to revenues to the businesses, actually began to target, as you noticed in the number of applications this time. So I would continue along that path as you decide how much more to support. Maybe I can tell you from looking at the restaurants, what we have seen is anywhere from 40 to 70% of revenues are reduced depending upon their business model, as an example overall. But I do believe the number of employees, the revenue impact of the organizations, and the changes to the Schedule C, I believe, that were late in the game are critically important as well, allowing that group of folks that may have already applied to return and see an increase would be very helpful for them.
All right, thank you. Many banks have announced that they will no longer accept applications, as we've talked about this morning, 2 weeks prior to the March 31st deadline, when Paycheck Protection Program is expected to close. Many of these deadline concerns come from the Small Business Administration delaying applications because of automated holes due to fraud and abuse. A suggested solution has been to put a timestamp on applications to ensure who apply up until March 31st are guaranteed to be processed. So also to you, Ms. Frazier, can you elaborate on the PPP information gap between the Small Business Administration and lenders, and how your community bank plans to handle the March 31st deadline?
Certainly, thank you. For us internally, what we set was a March 29th deadline, mainly because what I would speak to is it takes time for any bank, and us included, to process the application, ensure we have all the documentations, ensure the calculation is correct, and before we can submit to the SBA. And then once submitted to the SBA, it can be 24 to 48 hours, assuming there are 0 error messages. And what we have said to our borrowers or potential applicants is that get it in before that date, because we can't guarantee it will be completely approved by the March 31 timeframe.
Okay. Ms. Simpson, you mentioned complexity and confusion of tax deadlines stemming from Paycheck Protection Program and COVID-19. PPP was intended to be a lifeline for small businesses, not an avenue to force burdensome tax liabilities and operational challenges on Main Street America. So, Ms. Simpson, can you talk about some of the most widely asked questions CPAs have gotten related to PPP loans, and what guidance would be most helpful to get these issues resolved before tax day?
Well, it gets complex and gets into some nuances of tax code. Before we get tax returns filed, borrowers are looking for guidance as to how these are actually going to show up on the tax returns. So some IRS guidance is needed, and additionally some guidance around, again, how to report ERC as an additional credit opportunity that's been made available to PPP borrowers who couldn't take it in 2020 but are now eligible. There's some complex requirements around when that gets picked up on a tax return.
Okay. I thank all of you for participating today, and I yield my time back.
The gentleman yields back. Now we recognize the gentlelady from Kansas, Ms. Davis, for 5 minutes, Chairwoman, Subcommittee on Economic Growth, Tax and Capital Access.
Thank you, Chairwoman Velasquez and Ranking Member Luetkemeyer for holding this important hearing today. I'm really glad that we're talking about the next steps for the Paycheck Protection Program. It's obviously been a very, very important program. And with the vaccine rollout speeding up, there's a real hope for economic recovery and into the public health emergency that we're in the middle of. And, I think that it's clear, we've heard today and we've heard over the last couple of months that small businesses are still struggling to keep their doors open and trying to figure out how to move forward. And I'm really glad that so many of us on this committee are committed to providing the support that our small businesses need. Clearly, small businesses are the backbone of our economy. And I know that the Paycheck Protection Program has, at least from a number of people in the Kansas 3rd, has really saved a lot of livelihoods and enterprises from some pretty extreme economic difficulties. And I also know we heard about the roadblocks, the hiccups, the difficulties that folks have faced. And I'm kind of interested to start off with in whether or not Ms. Kennedy and Ms. Simpson, if you could kind of talk a little bit about the second draw restrictions, whether it's too restrictive for the folks that you all are seeing, and then also as a follow-up, and this can be for anybody, the major challenges that we're seeing that are slowing down the loan applications. Maybe Ms. Frazier, if you could answer that second question after Ms. Kennedy and Ms. Simpson.
Thank you so much. I would, on the second draw restrictions, I think that the guidelines were very reasonable. And certainly this second rollout of PPP really made a difference in helping the communities that needed the most service. The change with the Schedule C has been really significant. And I can't emphasize enough, time is not on our side. And so the time to help these businesses that are Schedule C to get the funds to underserved communities that, quite frankly, are the greatest impacted in the pandemic if you look at the numbers for economically disadvantaged communities and rural communities, to be able to get access to these resources. And the Schedule C change will make a significant difference. And I will say to you, in response to your last question, the errors and the holds have been a real challenge. There was a kind of a magic wand after the February 24th changes were made that helped to remove some of the errors, but the resources, the competent staff to help people address those errors is really what's slowing down the process. And with this looming deadline, it could absolutely cripple the program and small businesses from getting the help that they need if we don't get that addressed.
If I may, I'll address the second question and then go back to the first. Regarding the conversations around providing an opportunity for SBA to approve applications that are in the pipeline on March 31, that's great, but there's still so many applications that can't even get through the front door to get into the SBA system. In our written testimony, we provided some graphics because it is really complicated, and so visual aid has been included in the materials to help explain that front door that is trapping so many applicants. So if that can be taken into consideration when thinking about that March 31 deadline, that would be very helpful. As for the first question, around the 25% revenue decline for second draw loans, we are working with CPAs who are trying to help their clients understand whether or not they qualify at that 25% level. The SBA and Treasury have been very, very open and flexible in how borrowers can calculate that. However, we still need a key piece of guidance, which is whether some of the other business relief funds that came out of the CARES Act, such as provider relief funds and HHS funds, are included in gross receipts.
Thank you. And then I'll have to follow up. I'd like to follow up Ms. Frazier and Ms. Bombine about a couple of other things. So thank you all for your time. I yield back.
A gentle lady yields back. The gentleman from Minnesota, Mr. Hagedorn, is recognized for 5 minutes.
Thank you, Madam Chair. I appreciate you and the ranking Republican member for holding this hearing. It's very beneficial. As we know, the Paycheck Protection Program was designed to help businesses and others get from one side of the coronavirus to the other and keep people employed and paid, and it's been very successful in many ways. Many members of this committee and my agriculture committee where I served worked early on to see that farmers and ranchers would also be included in the Paycheck Protection Program. Unfortunately, there's been a little bit of an oversight, I believe, in the last legislation where farmers and ranchers are only allowed to use net income instead of gross income for calculations to apply for PPP loans. And I offered an amendment in the reconciliation process with this committee. It wasn't accepted, but I know there was a lot of folks on the other side of the aisle who felt like it was an amendment that we should take another look at. So I've introduced legislation, the PPP Flexibility for Farmers and Ranchers Act. It's H.R. 1411, has about 70 co-sponsors already, and that would fix this loophole and allow our farmers and ranchers to use gross income for their calculations. And Ms. Frazier, I noticed in your testimony that you discuss this concept. Can you explain to folks why this is so important for our farmers and how it will help our communities?
Thank you. Well, as we know, the farmers really are the ones that feed us every day, provide the food for our tables and for our lunches, et cetera. And they work very hard on their businesses, and oftentimes their net bottom line is very small in comparison to what they provide up at the gross revenue level. So similar to the Schedule C, this change to the Schedule F was critically important and is actually given the farmers quite a bit of hope. And we saw quite a number of farmers coming back looking for additional funds and excited to see that benefit. So I thank you for those changes and really support your initiatives to continue that.
Well, I appreciate that. Thank you. And as somebody who represents southern Minnesota, a lot of agricultural interests, I can tell you that when farm families sell out, they usually sell out to bigger operators. And bigger operators are not bad folks, but it means that we're going to have fewer people holding the land, working the land, living in our rural communities, shopping on Main Street, going to our schools. It puts enormous pressure on our rural communities to be sustained. And of course, it undermines what we do in agriculture, which is incredible, providing food and quality food at affordable prices for the American people and many around the world. So I'm hopeful that we can gain support for this piece of legislation. And if the program's extended in any way, make sure that that's included, because it would help over 100,000, I believe, farmers and ranchers across the country. And so I'd ask for your support on that. Lastly, I think it seems to me, based on what I've seen in the state of Minnesota, best thing we can do to help everybody across the board is to get rid of these lockdowns. Our state of Minnesota has been locked down as much as almost any other state. It's really hurt businesses, farmers. It's hurt people across the board. And we're seeing a real labor shortage out there. And unfortunately, with the schools closed for the most part for a long, long period of time and not fully reopened, parents aren't able to get back into the workforce full time. And we're seeing an enormous pressure put on for child care services. So I would encourage, if he's watching, our governor to open back up, get the kids back in schools, because it's also having a bad impact, not just on businesses and so forth, but addiction issues, suicide, people having problems with depression. Folks like me, I'm a stage 4 cancer survivor, and unfortunately there are people that didn't go to the doctor and get their screenings who are probably going to have worse problems than they otherwise would if they had that in time. And then you see students in record numbers in Minnesota falling behind, dropping out. These are the types of unintended consequences of lockdowns that really should be examined, and I think we need to make strong changes in that area. So if there's anyone that would like to comment on I only have 35 seconds, I apologize. But with that, Madam Chair, I'll yield back.
The gentleman yields back. The gentleman from Maryland, Mr. Mfume, Vice Chair of the committee, is recognized for 5 minutes. Also Chairman of the Subcommittee on Contracting and Infrastructure.
Madam Chair, thank you. My thanks to both you and the ranking member for pulling us together for this hearing and for the leadership that you've demonstrated on this issue going back over and over again. A couple of quick things. First of all, I appreciate the previous gentleman's remarks, particularly about the human aspect of what's going on, in addition to the very real needs of businesses out here in the country. For the record, Madam Chair, I was glad that you put in your memorandum to us a reminder that we've appropriated $800 billion in total for PPP. So Congress gets a big E for effort, but a much smaller one for effectiveness and efficiency, which is why this meeting is so very important, trying to drive us to where we ought to be with good testimony. I have a question for Ms. Frazier and then one for Ms. Kennedy. Ms. Frazier, you talked about extending the deadline beyond March 31st, which I'm in support of. And then you said we should refer to your written testimony for some of the ideas and thoughts that you had along those lines. So I went to your written testimony and was wondering if you could expand, Ms. Frazier, on a couple of things. First draw increased eligibility, second draw eligibility, second draw use of proceeds and the requirement that goes with that, as well as the Schedule C borrowers and Schedule C filers, the implications of that coming out of the SBA change.
Thank you. I will try to remember all those great questions that you have. So I will begin with the first draw borrowers. Right now, if someone were to apply for a first draw, they would not be eligible for a second draw, nor would they be able to spend the money in the 8-week period of time before the March 31st date. So maybe they didn't have an opportunity to do a first draw for whether the bank didn't support them or they didn't get the application in, wasn't aware. We really firmly believe that they should have an opportunity for that second draw to support their business. So expanding that time and giving them the time to spend the money as the rules predict. But also being able to go for an increase. Sometimes, for instance, in my testimony, I remarked about a Schedule C borrower. He's a video production firm and sole proprietor. He outsources the help when he needs it. When he applied for his first draw, he only was able to access $4,000. He needed much more money in the round one to do that because his business was shut down. So we supported it with an SBA loan, express loan of $16,000. If the rules that are now in place for Schedule C had been in place at the beginning for him, he would have been eligible for that full $20,800. And it would now also be forgiven as well. So he is left today with a $16,000 SBA loan that we have termed out for him over a period of time. He did come back for a second draw, again, early in the process because his business is still impacted, but the rules changed. And so our suggestion is that businesses like that are able to come back and reapply using that new calculation. Is very important.
And Ms. Frazier, I'm going to have to reclaim my time because it's dwindling. I would appreciate, though, if you could get back to me with expanded thoughts on those areas that you listed in your testimony that I just referenced. And Ms. Kennedy, if you could just take a moment to talk about Section 1112 of the CARES Act, which provided 6 months of debt relief for existing 7A and 504 and microloan borrowers. The 6-month period was extended under the Economic Aid Act, which was passed in December. Could you expand on the importance of Section 1112 in terms of current SBA borrowers, especially those with unforgiven loans?
Thank you so much, Congressman. The Section 1112 payments were really a lifeline for these small business borrowers. And when with the new Economic Relief Aid Act, the predicted amount of funds were underfunded. We discovered that they were underfunded, and some of those small businesses are not going to get the SBA debt relief payments that they need most. These are community advantage and microloan borrowers, as well as SBA 504 and 7A borrowers. And the predicted amount that was supposed to be 6 months or 3 months has shrunk down to 3 months or 2 months of debt relief payments. And so we're asking Congress, we know your intention to consider how we can close that gap and make sure those small business borrowers who plan, thinking about inventory and adding additional employees and supporting their operations because of the debt relief payments, to be able to get those resources so that they can continue to support their communities.
The gentleman's
Thank
time
you
has expired.
very much. My time has expired. Thank you, Madam Chair.
The gentleman from Minnesota, Mr. Stover, is recognized for 5 minutes.
Thank you, Madam Chair, and I appreciate the witnesses' testimony, greatly appreciated. I just have a few quick questions for Ms. Frazier. Can you elaborate on what the unresolved errors look like in the SBA application, as you mentioned in your testimony?
The item that I'm referring to is actually a fraud situation. This is a first-time draw applicant for their business. When the application was submitted to the SBA, it was determined that the business employer identification number had previously been used in the first round for an EIDL loan and a first round draw. And so we've been trying to work diligently through this process to find a way to get that released off of her so that she could have her first draw loan.
Yeah. Next question, Ms. Frazier. What changes need to be made to ensure that PPE isn't just a bridge to nowhere and that business owners are able to take a full advantage of what the program has to offer?
I think beyond the PPP, what was heard earlier in other oral testimonies, I think continued support to the SBDCs through the SBA and also the SCORE programs to help those businesses with their business plans, to help them look forward and find a way, whether they need to change their business model, adapt their business model, or just understand what I would refer to as working on the business rather than in the business. So I think funding those programs across the minority groups, across all groups would be very helpful.
And then, in your opinion, are the traditional SBA lending programs prepared to pick up where the PPP leaves off?
I believe so. And I also believe that through this process, many banks have become much more comfortable with the SBA programs and will continue to make use of them going forward. Yes.
The last comment I would like to make is, as you supported the PPP program in the lending institutions, some of the redundancy for expediency was left off the the normal way in which you provide a loan. Would you agree or not that some of the items of redundancy, as we get through COVID, we can erase some of the redundancy that you are asked to do by the federal government as a lending institution? And if so, name just a few of those.
May I ask for clarification on redundancy?
So the PPP loans were given out in an expedited manner, and some of the redundant and I would say some of the normal things you would do, like for instance the known customers in your respective banks, many people, or many banks rather, expedited the loans and not required to do all the quote normal end quote checks and paperwork. Are you prepared in any way to state that those the way you did the prior loans should be the same way going forward? And what I'm getting at is reducing redundancy, which is a third of your time preparing for that examiner to come into your business.
I appreciate that. Thank you. I can speak for my bank and a few others more than a few others that I've talked to directly, that while the requirements of the PPP program did not necessarily require us to submit what we normally would for a full loan package, we did do a good bit of the work behind it just to ensure. And the goal behind that was just to ensure that the borrowers received 100% forgiveness. And that's what's most important at the end of the day, that they didn't have a tail of a loan hanging around for them. So going forward, I'm not sure that I can answer off the top of the head. I'd like to give that question a little bit more thought and get back to you if that's okay.
That would be just fine, and thank you for your testimony. Madam Chair, I yield back.
The gentleman yields back. The gentleman from Minnesota, Mr. Phillips, Chairman of the Subcommittee on Oversight, Investigation, and Regulations, is recognized for 5 minutes.
Thank you, Madam Chair, and to our witnesses today. I'm going to follow up on my friend and colleague, Mr. Mfume's questioning about the 1112 program. To Ms. Kennedy, you called the relief provided under Section 1112 under the CARES Act, quote, a lifeline to your borrowers. That is absolutely true, certainly for the small business owners in my district, and I presume in all of our districts. And that's why I'm concerned about the gap in funding to fulfill the December promise, the so-called December promise that was made to businesses in the Economic Aid Act of last year. In fact, a smoothie bar in my district called DrinkFit was approved for a 7A loan exactly 1 month after eligibility for the first round of debt relief after that ended, despite starting the process a full year earlier. Then the second round of additional months of relief under the Economic Aid Act added eligibility on both sides of his approval date, leaving his business in literally a no man's land due to how that bill was written. So, Ms. Kennedy, can you speak to the challenges that the businesses that you serve have had with the Section 1112 program running out, and what steps you would like to see we in Congress take to make good on the promise that we made to the employers?
Thank you so much, Congressman. And I think your last statement of make good on the promises. We, as your nonprofit community partners, we reached out to those businesses and we let them know what was in the Economic Relief Aid Act. And to go back to them and let them know, I'm sorry, there's not enough funds, that was really tough. And one of our small businesses, who's a catering company, who has absolutely been slammed because he cannot open his business, he cannot run his business, he called and emphasized if there's anything that can be done to make sure that we can get those payments, we would really, really appreciate it. We're trying to pivot, we're trying to get our business back open, and we need this assistance. And we thought we had it, so we were planning based on having those funds available or that debt relief available. And now we need to figure out how we're going to make this payment. The need is great for those businesses, especially in hardest hit industries. And we hope that Congress can figure out how we can keep the promise that Congress made and intended for these businesses through the Section 1112 payments.
Thank you. You consider your message delivered. We have open ears, and I wholeheartedly agree. Ms. Simpson and Ms. Frazier, in your comments, you mentioned the changes made by the Biden administration to the loan amount calculation for business owners relying on PPP, including sole proprietors, independent contractors, and the self-employed. And as you mentioned, I'm hearing from constituents myself who say that the formula change has to be applied retroactively, or hundreds of thousands of business owners will be unable to access the potential of an increased loan. So a few questions. To what extent is money being left on the table? How much more support would companies be able to tap into if this issue were to be addressed? And is your recommendation that Congress take steps to correct the issue, or can that be done at the administrative level? Perhaps Ms. Simpson, if you might begin.
Thank you. We don't know exactly how much money will be left on the table, but we do know, based on some conversations we've had with CPAs who've looked at their client base of Schedule C filers, that their loan amounts could be as much as 50% more or doubled. So many small business owners operate on a shoestring, and their net income, the bottom line of their tax filing, could show a loss or barely any income at all. But if they're able to use this gross receipts calculation that is now available to new Schedule C borrowers, they would be able to access a substantial amount more, again, up to the cap that the SBA has approved.
And just relative to the question about Congress or at the administrative level to address it, do you have thoughts on that subject?
I'm no constitutional expert, but it's my understanding that SBA believes that it would require congressional action.
And Ms. Frazier?
Thank you. What I would like to do is look back through our applications and give you a more firm number and get back to you. But I do know that we have seen an increase in the number of applications over the past week since that calculation changed. And I echo what Ms. Simpson said, that I believe it could be as much as 50%, 60% increase in loans for a good number of those businesses overall. So again, I think that to have that work, the feedback that we have received thus far is that maybe the systems are not adequately prepared to accommodate that increase. And so maybe there needs to be consideration to, I don't want to call it a third draw, but a draw increase type format.
All right. I see my time's expired. Thanks, Ms. Frazier, and I yield back.
The gentleman is back. Now we recognize the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you, Madam Chairwoman, and thank you very much to all of our witnesses. In the second round of PPP, one of the requirements was a 25% reduction in revenue in a quarter, one quarter of 2019 versus a quarter in 2020. I offered an amendment which would allow to compare any 90-day period in 2019 versus 2020 as opposed to a set calendar quarter. Ms. Frazier, from a community banker's standpoint, would this have been helpful to banks and in the interests of small businesses if we could pass such a provision?
Thank you. I think any time period that a borrower could review and look at their business, it could be helpful, certainly, in allowing more people access rather than just a traditional calendar quarter.
But as far as you know, that wasn't a significant problem for many?
It would be difficult for me to answer that fully, but we did not hear any commentary that it was a problem.
Okay. Ken, from a community bank standpoint, once again, do you feel our community banks can handle the pipeline of loan requests that exist? My understanding is it's as high as 50,000 nationwide that need to be facilitated between now and March 31st. Do community banks feel that's a problem?
To my knowledge of all that I have talked to, we do not feel that this is a problem to handle. And we really take pride in serving the communities in this way.
Okay, great. Were there any sectors that you believe, industry sectors such as restaurants, for instance, that were underserved or PPP was not well enough designed to serve effectively?
I cannot speak to that directly. I'm not aware of any that were not addressed or were not eligible. I do believe I'll go back to the changes on particular Schedule C, where moving to that gross receipts method, there were many businesses that were operating at a net loss that were ineligible. It didn't matter particularly about an industry, but at that net loss, and that changed the picture for those folks.
Thank you. And Ms. Frazier, again, do community banks have any concerns or many concerns with the forgiveness procedures that are currently outlined for the loans?
No, it seems to be working smoothly for us, and the process continues to improve. And with the most recent simplified application for loans 150,000 or less, it's working smoothly.
That's great. Will a loan that's outstanding that has not yet be forgiven be used by the bank, for lack of a better way of putting it, against the business's line of credit?
No, I'll speak only from my bank, in that the process we used in helping the borrower access the PPP loans, we felt assured that they would have forgiveness. And so we continue to, even though borrowers that have PPP loans, offer them additional loans and support their business needs.
Okay. Well, those are very positive answers. That's good to hear. Are there any aspects of the PPP program that you feel are too burdensome to lenders or to your customers that you feel we should work on?
I would go back to the errors and being able to provide resources such that the process if there is an error identified or something is holding up the system, that we have access to folks that can help us resolve it, because you have the benefit of actually approving the loans or approving the dollars. We have the very wonderful benefit of being able to say the loan was approved and then forgiven. And so that's our ultimate goal, is to get to those answers for the borrowers as quick as possible.
Last question. Do you think some of those resources need to be dedicated to the SBA?
It will help with the errors, yes.
All right, thank you. I yield back.
Error resolution.
The gentleman yields back. The gentle lady from Illinois, Ms. Newman, is recognized for 5 minutes.
Well, good morning, everyone, and thank you, Madam Chair and Ranking Member. Appreciate the time this morning, and thank you to all our guests today. Very informative and very helpful. So this morning, I am directing my questions to Ms. Kennedy and Ms. Simpson. And the former gentleman was talking about loan forgiveness, and I was going to tag off that. So in my district, loan forgiveness has been a significant problem. We have about 80% of our businesses in Illinois 3 are micro businesses, so under 20 employees and very small revenue. So with that, they are busy running their business, and getting their loans forgiven has been quite an ordeal. So I'd love to ask Ms. Kennedy and Ms. Simpson, from both of their perspectives, what can be done either by the SBA or by Congress to make that easier for these loans to be forgiven. And I'll start with Ms. Kennedy.
Thank you so much. You know, we are CFI, a community financial institution, as a CDC and microlender and CDFI. And the forgiveness process we have found to be fairly straightforward, as Ms. Frazier said, especially for loans under $150,000. She also mentioned small businesses are working in their business versus on their business. So sometimes that takes a little time to get the documentation, but the fact that the applications have been streamlined has really made a critical difference in helping the small businesses get that forgiveness. So we've had fairly good experience with that, and responsiveness from SBA when there's been questions.
Thank you. And Ms. Simpson, as a CPA, what guidance can you give businesses to because it is an onerous document. I read through the 20-page document. It's fairly onerous for people to get through. And luckily, we have a lot of kind CPAs, and now we have the community navigation program that will be helpful in that regard. But what do you recommend to those folks who are struggling through that without spending more money?
Thank you for the question. We have actually worked with a technology provider to create an online platform that helps small business borrowers work through the forgiveness process using an online platform. So it avoids, again, I love Excel. I think it's awesome. Not everyone agrees with me. So this tool allows small business owners to use a more friendly environment to let them input information around their payroll costs, their rent, their utilities, and the new expanded costs that are now eligible. It's really important for small business owners to know that there are safe harbors within the forgiveness process. If they were shut down, which so many of them were, they can avoid some of the implications of a potential headcount reduction. So understanding that there are opportunities to streamline the forgiveness process and that there are online tools to help, I think would be a good place to start. And I've got a lot of resources that I can connect you with to get that information out there.
That would be much appreciated. It's a significant problem in my district, so I'd really appreciate that. Thank you. And let me just end by thanking the committee for all their great work on the SB program. Overall, it has helped my district immensely, and I really appreciate that. I also would add that I very much appreciate the fairness of the program, that it addressed many industries, and I think that many industries is important, and that we emphasize those that were hurt the hardest, such as stages and venues and restaurants. So I'm very happy with the broad breadth of the program, so thank you all. Now yield back.
The gentle lady yields back, and the gentle lady from New York, Ms. Tenen, is recognized for 5 minutes.
Thank you, Madam Chair, and good morning to everyone. It's such an honor to work with you again on this committee. I want to thank the witnesses for their insight. This has been really, really a productive and helpful meeting. It's been a long, hard year, and our nation is finally turning the corner to fight this COVID-19 crisis. Small businesses are the heart of the economy in New York's 22nd district and have been hit extraordinarily hard during the pandemic. In fact, 94% of the workers in the 22nd district are employed by a small business, so they are really one of the bright spots in our community, and the Paycheck Protection Program has been a phenomenal lifesaver for us. It's allowed many businesses in my district to continue to pay their employees and to survive the shutdowns that we've experienced in New York, especially upstate. In New York, just for some information, PPP has provided 140,000 loans totaling $12 billion and has saved literally hundreds of thousands of jobs. This has been an effective COVID-19 relief program, and we are, as we now to begin to hopefully head into pre-pandemic life, into a better way forward. Opening our economy is obviously critical to this, but there are many businesses that still need to benefit from PPP. And just some good things that have happened: 397 jobs were added to the economy in February, well beyond the 166,000 expected. The unemployment rate dropped to 6.2%, which is a huge decrease from the peak that was 15% that we experienced early in the pandemic. The nonpartisan Congressional Budget Office has estimated that unemployment will continue to fall as vaccines are more widely distributed. I'm also concerned about where we're going to go, not just with PPP, but to make sure that our small businesses continue to benefit from the Tax Cuts and Jobs Act as they move forward into pre-pandemic life. I've heard from numerous businesses that are concerned about that, as well as maintaining and trying to deal with their new taxes should that happen during this crisis. The Paycheck Protection Program will expire, as everyone has talked about here today, on March 31st, and the program has nearly $128 billion of funding still available. While I do not support all of the provisions of the American Rescue Plan, I continue to believe that parts of that bill have merit, particularly provisions that would continue to extend relief to small businesses and individuals most in need. And I recognize that obviously while we're entering into recovery, there are many businesses who have done better than others and some who have not. Some have done well, some have unfortunately been forced to close. But I'm also a small business owner, and I understand the difficulties we face. And I'm committed to doing everything we can to make sure that everyone can return to normal life and all businesses can thrive. So one of my big questions is, as we head into this complex tax situation, and hopefully the Tax Cuts and Jobs Act will remain in place because it has been cited as the single biggest benefit to my small business community in the last 30 years, I wanted to ask and turn my attention to Ms. Simpson, and just to get her expertise as a CPA. Obviously many businesses are struggling with the complexity and confusion around PPP that you've discussed, but how is it going to specifically impact their taxes? Is there a way that maybe we can put the online program you suggested for forgiveness? Can we place that? Also, can we do something with dealing with the paperwork for taxes as they're coming due right now?
As a colleague said, the tax code may never be less complex, or it may never be easy, but we can certainly strive to make it less complex. And I believe that you'd find many people who are willing to go along with that statement. We are working with the IRS to provide, to get guidance on how the PPP programs will impact the tax returns of many borrowers. We thought the problem was solved when Congress allowed PPP expense deductibility. However, there are complicating factors such as states that may not conform to that, or they may conform with different income caps. So lots of moving parts and pieces to navigate across the entire country, and how systems are operating there. We would be interested in talking about a resource that we've provided that helps CPAs and small business owners navigate the differences between federal tax treatment and state tax treatment. That is a document that we do have available.
Thank you. My time has expired, but would that be something that would be on an online portal?
I certainly have to go. I can go back talk to the team about that.
Great. Thank you so much. Thank you, Madam Chairman. I yield
Sure.
back.
The gentle lady from California, Ms. Chu, is recognized for 5 minutes.
Thank you so much, Madam Chair. First of all, thank you, Hilda Kennedy, for being here. Hilda Kennedy is my constituent, and she was one of the first persons to contact my office about the need for a Paycheck Protection Program set aside for SBA microlenders, certified development corporations, and CDFIs. And so thank you, Ms. Kennedy, for being here to provide the perspective of a small community financial institution and especially for the work you've done in my district to connect underserved businesses to COVID relief. It was thanks to the direct advocacy of constituents like you that made it so clear to me that PPP needed a dedicated set aside for underserved businesses. And with the chairwoman's support, we succeeded in creating those set asides for small banks and community financial institutions like your business, AMPAC. Those CFIs have processed over 110,000 loans directly, but also provide crucial guidance and resources to small businesses. Can you talk about the kind of services that CDCs have provided to small businesses and how they differ from what larger commercial banks can offer?
Thank you so much, Congresswoman, and great to see you. The difference between a CDC and a bank is we are mission-based lenders. So our bottom line is the small businesses that we serve, and we're not beholden to shareholders. We also provide a lot of hand-holding for our small businesses. So from technical assistance support to webinars and training, to just being available when the business plops in your office and just needs to be reassured and needs to know, how do I complete this form? That's the role that we play. And we've been working with a number of communities to manage emergency relief programs, COVID-19, from counties to state to other local governments. So we're in the community and part of the mission of serving small businesses.
Well, thank you for that. And also thank you for mentioning the importance of the Community Advantage loan program in delivering capital to underserved businesses over the long term. My legislation to give statutory authorization to this program would increase the targeting of underserved markets and explicitly include business owners of color in the program. And it passed the House last December. It's a top priority of mine to pass the bill into law this Congress. And what is important is the success of the PPP set aside for CFIs show that the Community Advantage model works at scale and is particularly powerful for reaching underserved and underbanked communities. Can you describe your interest in rejoining the program? Talk about the way that these Community Advantage loans would benefit the small business communities that you serve?
Thank you. I cannot overstate that, because those small businesses, especially economically disadvantaged businesses, critically need this program. And as PPP stabilizes these businesses, they're going to be ready to grow. Underserved communities were hardest hit as a result of the pandemic, and Community Advantage targets those communities. So we really need to make the program permanent and need to open up for new CA lenders, and we would absolutely want to be part of that conversation. We have businesses who need the help, and they call us for the help. And as a Community Advantage lender, we'll be able to help this veteran who just called our office the other day, got some new government contracts, but needs help from a program that Community Advantage could serve. So thank you. We'd love to support you in doing that.
Great. And you've also talked about the unique challenges facing sole proprietors in PPP. They are more likely to be women and people of color who lack access to traditional banks. Can you say what issues they have and why they need programs like yours?
Well, those businesses, by and large, need more hand-holding. They don't have access to great CPAs or bookkeepers. They're putting their information on a spreadsheet, or maybe they have QuickBooks, but they need hand-holding. And it's community-based lenders, mission-based lenders who do that kind of hand-holding to make sure they can get the resources that they need, and then to be able to have the resources to provide them. So 80% of America's businesses are non-employer businesses. Those are the small Schedule C filers. They need additional hand-holding, and mission-based lenders or community banks really provide that kind of support that they will not get at larger non-traditional banks.
Gentle lady's time has expired. The gentle lady from California, Ms. Kim, is recognized for 5 minutes.
Thank you, Chairwoman Johnson, and I would also like to thank our ranking member, Luttenmeyer, for holding this very, very important hearing today. With the Biden administration announcing 5 changes to PPP on February 22nd of this year, the looming March 31st deadline does not give our small businesses the time to adjust to the new guidelines issued by the SBA. I'm also concerned that the SBA is not forthcoming and transparent when it goes beyond the statutory 90-day period to review the loan. The SBA should be communicating with borrowers and lenders about the status of the loan if it goes beyond the 90-day period. And I would like to engage Ms. Fraser in the next round of questioning here. To date, the SBA has cleared approximately 36% of all PPP loans through the forgiveness process. However, certain loans that are not processed right away have tended to lag beyond the 90-day review 90-day review window imposed by the SBA. So has your institution dealt with any of these loan reviewers taking longer than 90 days? And what steps can SBA take to make the loan forgiveness process more efficient?
Thank you for your question. We do have loans that have been in the forgiveness portal for a longer than 90 days. They tend to be the larger loans. They are taking longer. And you identified correctly, there is a lack of communication to the bank and to the borrower, which is causing a bit of stress on the borrower side because they're concerned about, what if it's not forgiven, what happens then? So we completely agree with what your statements are. I do think communication of where they are in the process, what is happening, what they need would be really helpful overall in at least calming the fears of the borrowers and allowing us to keep things moving forward and gathering the information that they need. That would be the number one request of what would need to be done.
Well, following up, we have heard from numerous sources and constituents about the delays in processing loans due to SBA hold codes. Can you comment on your experience with these hold codes and what the typical length of delay looks like when addressing the codes?
The length of delay could be 2 days, it could be 2 weeks, it could be, as the example I shared earlier, since January 29th. It really depends on our ability to access information and what that hold code might be. If it is something that we can resolve without the SBA, maybe there's a piece of documentation missing or there's a number that isn't quite right, we can get that done fairly quickly, inside just a day or two or a few days. If it is something that we need to rely on the SBA or really need to get information from them to clarify what they're looking for, it will take considerably longer over time.
Well, do you believe extending the March 31st deadline could help elevate the delays with the whole code?
It could. It at least would be able to resolve them and allow people to access the money that they've applied for and be able to take care of those needs.
Well, thank you. With that, I'll yield my time back.
The gentlelady yields back. And now we recognize the gentleman from Illinois, Mr. Schneider. Welcome back to the committee for 5 minutes.
Thank you, Madam Chair. It's wonderful to be back. I'm excited to be working with you and my colleagues on this important committee. And thank you as well for holding this important hearing. I want to thank the staff for helping us work through the challenge of these difficult times, and obviously thank our witnesses for sharing with us your experiences and perspectives as we try to understand this issue. Very soon, we will vote in the House on the Senate amendment to the American Rescue Plan and send it to the president for his signature. I'm very grateful that this legislation includes another $7.25 billion for the Paycheck Protection Program and expands the businesses eligible for the critical funding. Our goal with PPP has always been helping our businesses businesses, in particular our small businesses, get to the other side of this pandemic. The American Rescue Plan will help ensure that when we get to the other side of the crisis, our small businesses will benefit from a growing economy and hopefully be able to chart a path for recovery and renewal. Obviously, vaccines are putting us on that path, on beating back this environment, but it's not certain when we will finally get to full recovery mode. And that's why providing the support for our small businesses is so important. For many businesses in our district, PPP funds have literally made the difference between being able to hang on and weather the struggles of the past year or having to close their doors oftentimes for good. I appreciate everyone's testimonies. I've heard and shared with colleagues many of the same concerns that have been brought up here. I will come to the error codes, but I want to talk first, and maybe Ms. Kennedy, you can touch on this. Others said in their testimony as well. As we look to the future, as people are trying to figure out how will they get through this and then think about what's next after, because it's not easy to go to the next place. You've touched on the need for financial education, technology education. What things, whether it's your own group, CDC that's doing this, or the SBA more broadly, what type of education and training do you think is most important to help businesses get to the recovery and chart their future beyond that?
Thank you, Congressman. I think one of the things that we've said in this process is the wheat and the tares have been separated. And we learned throughout this process that business financial literacy, business acumen literacy is so very critical. A lot of the small businesses that we worked with really did not understand their financial statements, didn't understand cash flow, didn't have reserves. So the opportunity to pivot, the opportunity to adjust, they couldn't do it because they didn't have that training. So the SBA has incredible programs through the SBDC and SCORE, as you've heard, and through partners like the CFIs, CDCs, SBA microlenders, to provide that kind of technical assistance to help people understand their technology and understand their business financials. That literacy is really critical.
Great, thank you. I think it's important. We've been having webinars, but the support for these companies, entrepreneurs, sole practitioners who are just trying to provide for their families, I think is crucial. I could talk to everyone about this, but I want to get to these error codes as well. Time is of the essence. Everything, these businesses are literally holding on by the day. It's important, and applications have been checked for errors and inconsistencies that could show fraud. But oftentimes, as has been earlier noted, that there are sometimes flags that go up that are not fraud, but maybe a clerical error or something like that. Ms. Simpson, I'll turn to you. You talked about how many applications have been flagged incorrectly, and how it's hard. Business losing a week or even 2 weeks could be the difference between getting through this pandemic or not. Any thoughts you have on how we can accelerate the process, not of making it easier for people to abuse the system, but making it easier for people who are incorrectly flagged to get through the system and get the support and assistance they need?
Thank you so much for the question. I think transparency into what's causing a hold code and what resolution steps concretely are needed to move beyond a hold code is where so much time could be gained. So having a manual that says if you've got this error code, these are the exact steps that either the borrower needs to take or the lender needs to take. These are the absolute sources of information that if you supply these, the hold code can be released and moved on into a loan application process.
Got it. Thank you. I'm out of time. I could ask everybody, but I yield back.
The gentleman is back, and the gentle lady from Texas, Ms. Van Dyne, is recognized for 5 minutes.
Thank you, Madam Chair, and to the ranking member for holding this hearing today. When I talk to small business owners in Texas, they tell me two things. PPP was crucial for surviving the most challenging days of the pandemic, and that they aren't looking for any more handouts. They don't want to just hang on anymore. They want a chance to earn a living. They want to be able to open their doors, and they want to be able to get their customer base back. It's been an entire year that we've held businesses back in the name of public health. The bottom line is the best relief we can give these businesses is to remove government-mandated constraints. and allow them to get back to work. The Paycheck Protection Program was designed to be temporary and targeted, and unfortunately, as demand for the PPP has gone down, my colleagues across the aisle are still eager to add more money to the program, even as over $100 billion remains unused. As a committee, we need to be focused on fixing the remaining issues of the PPP while also figuring out a way to bring this pandemic-related program to an end. And with that, Mrs. Frazier, community bankers were on the front lines of delivering PPP loans. In your testimony, you cited that community banks made 60% of the first round PPP loans. Now, almost a year later, how do you see this program coming to an end and a transition to recovery being made?
Thank you for your question. And round two, I suspect that community bankers continue to be leading in the efforts of delivering the PPP loans. I believe the benefit of that is the community bankers are able to really work with the borrowers and be partners in helping them look forward. But beyond PPP, I go back to, I think there needs to be more investment into the programs that can support these businesses and helping them understand, as Ms. Kennedy said, their financials, understand their business model, understand how they can move forward as well, and supporting them. Banks can continue to support and partner with the businesses, helping them grow, helping them understand the opportunities for them. But there needs to be another party that can support them in understanding their business overall.
So, as the ranking member of the Oversight, Investigations, and Regulations Subcommittee, it's important to me that we give our small businesses the best opportunity to succeed coming out of the pandemic. And this means removing any unnecessary red tape. So, Ms. Frazier, again, are there any SBA regulations, whether for PPP or other programs, that this committee should be reviewing to help our businesses recover?
For the small businesses, the most recent changes to the forgiveness application and $150,000 or less in those loans, I think that's been a huge benefit for them. And for others, the changes to the second draw has been a big benefit. SBA as a whole, I think that continuing to work with the community banks to deploy the other programs and be able to, as was noted earlier in the conversation, make those approvals more timely and consistent would be very helpful.
All right, thank you very much. I want to thank all of our witnesses for being with us today, and I yield back.
The gentlelady yields back, and now we recognize the gentleman from New Jersey, Mr. King, for 5 minutes.
Well, thank you, Chairwoman, for pulling us together here. I know many of us are looking forward to the warm weather ahead, the summer ahead, and enjoy some outdoor activities. Many of the businesses in my district are seasonal businesses along the Jersey Shore, and they had a really tough season last.
So I'm going to yield to the gentleman from Florida, Mr. Donalds, on right, because Mr. Kim is dealing with some technical issues. And we will get back to Mr. Kim. Mr. Donalds.
Thank you, Madam Chair. Listen, this has actually been a great conversation, Madam Chair. Thank you, and thanking the ranking member, Mr. Luetkemeyer of Missouri, for really bringing us together as we begin to unwind the PPP program. And I would stress, members, we have to really look at beginning to unwind and sunsetting this program. It's clear that the program, obviously, we designed it to challenge and to help the challenge
Last year, they need
of the COVID-19 crisis, with the rate of vaccinations that are occurring in the United States amongst the vulnerable populations, people over the age of 65. Also combined with the facts that you have many states that have already begun reopening, we have to make a decision here. And one of the clear decisions is, are we going to continue for how long this loan guarantee program? One of the things that actually really came out to me during this testimony from from all of the witnesses is that one of the issues isn't really per se PPP in and of itself, but it is an ongoing issue in the United States, and that is the lack of community banks to address all of the financing needs of small businesses and micro businesses in communities both rural and urban and suburban across the United States. And if this Congress is going to take this matter seriously, we have to begin to take a look at the statutory and regulatory environment upon which community banks have to operate under, which is why, in part, we've seen an almost 50% decline in the amount of community banks in the United States, since the passage of Dodd-Frank more than a decade ago. So I think it's time that this body begin to take even more steps to allow the community banking industry to flourish in the United States, so we actually can address systematically the issue of banking deserts, the issues of access to capital, the issues to actually help all of our small businesses and micro businesses, whether they happen to be led by women or minorities or anybody else who operates businesses here in the United States. Really, I just have one question, and it's a piggyback off of the question from Ms. Kim of California, and it's directed to Ms. Kennedy. Ms. Kennedy, real briefly, if Congress decided to extend the PPP program, how long of an extension do you think will be needed to clear the current backlog to help those business owners who have applied but they're waiting to get through their hold codes and the like?
Thank you so much for the question. You know, my association, NADCO, we have not taken a firm position on the amount of time. But from talking to our staff, we believe 60 to 90 days would give the time to address some of those error codes and to try and make sure these Schedule C businesses get the help that they need after getting the application just approved on March 3rd. There are so many businesses who need to make sure that they can qualify with the new guidelines of Schedule C, and there are a number of businesses that need that help. So from our personal advantage, a 60 to 90 day could certainly help us to get through some of our backlog.
Thank you so much, Ms. Kennedy. And Ms. Frazier, same question to you. I know the banking community obviously is looking very closely at this. And, you know, obviously you guys have a continued relationship with SBA. As a former credit officer in a bank, I've always enjoyed my dealings with the SBA, and yes, I'm being highly sarcastic. But, you know, Ms. Frazier, with respect to your industry group, what would you guys recommend to Congress if we decided to actually make a temporary extension to unwind the backlog?
First of all, I want to thank you for your support of community banks. We really appreciate that. And secondarily, in response to your question, we don't have a specific timeline, but I think in agreement with Ms. Kennedy's timeframe, I think 60 to 90 days should certainly allow for the errors to be resolved overall and to accommodate the changes or allow the borrowers that are now eligible under the new changes to get through the pipeline.
All right. Thank you, Ms. Frazier. Thank you, witnesses, for your time. Thank you, Madam Chair. I yield back.
The gentleman yields back. Now we recognize the gentleman from New Jersey, Mr. King, for 5 minutes.
Thank you. Thank you, Chairwoman. Hopefully this works better this time around. But what I was just getting at was just, the seasonal businesses that we have in the Jersey Shore. And in December, Congress, we passed additional help for small seasonal businesses, allowing them to apply for an increase to their first draw PPP loan based on a 12-week period of their choosing that better represents their normal revenue. For a lot of seasonal businesses, this first draw increases have been a lifesaver. But I've heard from other seasonal businesses in New Jersey that they've been turned away by their first draw lender, basically being told, quote, "We're not doing this," or, quote, "There's too much paperwork." And unfortunately, they don't have other options to go to a different lender. My office called one lender, one of the big banks, to ask why they were turned away customers for first draw increases, and suddenly they start processing them. We contacted another one, and after hearing that their policy made by someone up the management train was not to process these top-offs, I gave them a chance to correct the record in advance of this hearing, but they still haven't gotten back to me or processed that increase for business on the shore for about $70,000 that they're eligible for. Who knows how many other businesses or others are experiencing this or being turned away. I know we're asking a lot of lenders right now and that they've worked hard to get all this PPP money out over the past year, but Congress did authorize first draw increases to help seasonal businesses. And I find it unacceptable that some lenders, particularly the larger ones, are simply choosing not to do it. I wanted to start with Ms. Simpson. Have you heard of this happening? Or are there other challenges that you're hearing from seasonal businesses when it comes to receiving their first draw loan increases?
Thank you for the question. We are, I'm going to pick up my phone. I apologize. My headphones died. I've been on here for a while. So I apologize for the awkwardness. But yes, we have heard that borrowers are not having much luck getting loan increases approved. So that is not an isolated incident to the Jersey Shore.
Yeah, this is something that I'm just trying to get a sense of, just how significant this is and how widespread it is. I maybe follow up with Ms. Kennedy or Ms. Frazier. As small lenders, have you helped any customers with first draw increases? Just trying to get a sense of your perspective from your end.
We have tried to help small businesses with first draw increases, and that's part of where we get some of the error codes, and it becomes an issue for us. And that's why this time that we're asking for to be able to work through those and get resources on addressing the error and hold codes would help us to be able to help more small businesses get that increase and address some of those concerns. Thank you for the question.
Ms. Frazier, anything you wanted to add on your end?
We have not had any seasonal businesses. We haven't processed any PPP loans for seasonal businesses for that increase. I can't speak directly to that. We have had a request only from 2 borrowers to increase their original loan. And part of the process is once it has been reported on the Form 1502 to the SBA, there is reluctance or there is quite a bit of pushback on actually processing that increase.
Okay. Well, thank you for that perspective. Something I'll be looking to follow up on. I would also like to just highlight that SBA issued a new interim final rule last week allowing sole proprietors or Schedule C filers to use their gross revenue to calculate their PPP loans. This was a welcome change, finally making PPP worthwhile for more of the smallest, most underserved businesses. But as Ms. Frazier noted in her testimony, borrowers who had already applied for the PPP loan before the rule are being left with a smaller amount and are not being made whole. SBA is claiming they don't have the authority to make this rule retroactive. And Madam Chairwoman, I know you share my view that sole proprietors who already took a PPP loan should be able to use their gross income. And I ask to be able to work with you and others together on a solution to make sure they're treated fairly. And so with that, thank you, and I yield back.
The gentleman yields back. Okay, so with that, let me take this opportunity to thank all our witnesses for their illuminating testimony. Your experiences have given us insight into the current state of PPP and the impact of reforms that the Biden administration put into place. I'm pleased to hear that these changes have helped money reach underserved businesses, but it is clear that there is more we must do. On this committee, we will continue to work to make the program more equitable and accessible for the smallest of small businesses. The public health situation surrounding the virus is improving, but we cannot let up. Small businesses still need our help, and we must work to ensure this program is serving their interests. That means continuing to evaluate the coverage of PPP and making the necessary tweaks to maximize the program's reach and impact. I ask unanimous consent that members have 5 legislative days to submit statement and supporting materials for the record. Without objection, so ordered. And if there is no further business before the committee, we are adjourned.